Hello, traders. My name is Anna and I'm head coach at Leverage. Today is day 2 of our risk management marathon, and today we're talking about mastering position sizing, which is really important for us as traders is to know our position size when we want to take part in the market. So I'll guide you through different examples. I will share my C trader afterwards, and I do want to say, please do not copy any of the trades because those are just for the examples, just so I can guide you through and just explain as I trade about my position sizing in the market. I want to say thank you so much for everyone who joined yesterday. I appreciate all your questions. Thank you for the emails. I really appreciate it. Thank you for the feedback, and I'll make sure that we listen to you guys, what you're suggesting to us. So today, everything is about mastering position sizing. Now, the first thing first is, what is position sizing? So if you're a trader, then you know that we can actually choose how much we want to risk with, what's the volume that we want to trade with. So position sizing, it directly affects how much you can win or lose on a trade. And normally I would say when you are focusing on your position sizing, it's always better to focus on how much you can lose. So, and why? The reason why is simply because once you focus on how much you can lose, you prepare yourself mentally. And yesterday I talked about how much the mental state is important for us as traders and how important it is to know what's comfortable for you, where the emotion's coming from. So I think for me personally, and this is something that I feel really like, I would say confident when it comes to suggesting traders, is to say that when you choose your position size, always calculate at how much you can lose instead of how much you can win. And so the reason for that is that, first of all, you already accept the loss once you calculate your lot size or shares, or as you can see, like if you trade stocks, then you use shares. If you trade Forex, you could use lots. If you trade like indices, then you can use the contracts, losing words today. And then once you accept that loss, when you are choosing your position size in the market, then it becomes much easier for you mentally also to look at the trades. And I will demonstrate after how that is, what my thought process is, because that's what that's where your feedback was yesterday, that you really enjoyed when I was walking through like what emotions, what's going on in my head, because those are the things that traders don't want to share, because that's like the dark side of the trading, right? It's always the battle with yourself. But with position sizing, I really feel confident saying that you choose it on the basis of how much you can lose. And once you know that number, then you can figure out if that's the right position size for you. So, and when you trade stocks, right, then you can choose your position size in shares, Forex, and lots. And I think I already said this, in indices is the contracts. Now, what is risk per trade? Now, this is obviously really, really important question. Now, I want to start and talk about, first of all, what is not just like percentages. Obviously, percentages is great to know, but I really want to first, the risk per trade is the amount of your account that you're willing to lose, again, not to win, right? Willing to lose, and the trade does not work out. So, again, we're focusing on the losing, how much we can risk with, right? So I want to say, when it comes to choosing the risk per trade, there's really like two sides of it. First of all, you look at your data. So you look how your strategy is doing. How many losses in a row are you getting? For example, you're getting 10 losses in a row sometimes. Now, can you afford to risk 0.25, 0.5%, 1%, 2%? Right? So you need to like logically think, can you afford to lose that much of the percentage of your account, right? So let's say if you know that your losing streaks are very little, right? And normally let's say you maybe lose 3 and then you win 1, you lose 2, you win 2. So if your losing streaks are smaller, then obviously logically thinking, you can afford to risk more, right? And put the bigger risk on your account. But for me, it's always the second thing that you need to consider, right? That I'm considering. So what is the risk per trade that I'm willing to do? Obviously, knowing the data is important, but I always have the saying, how much of the risk I can stomach. And stomach, it comes to, again, my emotions. And you probably now think, Anna is some emotional beast in here and she doesn't have control or anything like that. And she's always talking about emotions. She's always struggling. But the thing is, I have figured out throughout my trading years that emotions is and always will be part of the trading, because as humans, we are emotional beings. And you can tell me that you have the best emotional control, but still you do get emotional and you need to control. So maybe you just have a better emotional control than I do or someone else, right? But I think as it comes to the risk, it is really important what mentally you can stomach, what mentally you're feeling when you see the trade is going to lose or the trading is winning. So the same thing we talked about on yesterday, right? So finding the edge in the market, the risk management edge, is that you need to know what you're comfortable with, how you're feeling. Are you starting to chase something? So risk per trade, yes, you pick it one based on your trading, like your data. Let's say the bigger the losing streak, probably the better to use the smaller risk, right? Especially if you are trading with the prop firm, because prop firm, we have drawdown rules in place, and it's simply because we want to make sure that the traders know how to manage their risk properly, right? So again, if you know that your losing streak is bigger, currently myself, I am going through a bigger losing streak. So I can have 6 7 trades in a row that are losing, and it is definitely frustrating. So the right thing for me to do is to lower the risk, right? And it just makes sense. Instead of like risking 1%, I'm going to risk 0.5% or less, right? So, and then another thing is the emotional attachment to your risk and how much you can stomach. I want to also point out that there is no standard rule of the risk. And I really like, you probably have heard, that professional traders risk 1 to 2%, no more, no less. This is like their standard. And I do want to say that I don't agree with that. I think we ourselves as traders, as humans, right? We found what works, like we are finding what works for us. So if you're here someone who, let's say, is trading 0.10%, 0.05%, or 5%, honestly, it doesn't matter, because all that matters, it doesn't matter what others say, right? What matters is that you know exactly, right? You know exactly what's your risk per trade. You know exactly how you feel when you're executing, when you are in the trade. And another thing is you know exactly per your data, you know exactly what is it that you need to do and how much you need to risk. And when you calculate your risks, then you can accept that loss. Then it comes from taking that setup. So yes, we do have these 0.25, 0.5, 1, 2, and so on. These like I would say like an example what you can risk with. But honestly, I think what traders need to find out is what suits them and how does that make you feel. And I want to give you also realistic example of what's happening now in my trading. So Q1, so the first part of the year, first 3 months, were really, really rough for me. The market was very volatile. And by the way, I'm going to speak more about the how to adjust into volatile markets, how to adjust the risk, and I'm going to expand. But that's what I want to also start in here to say that I did lower my risk, and for some of you, it will be drastic lowering of the risk, because I used to trade 1% risk and I cut it down all the way like 10 times less, and I was trading 0.10% per setup. Now, some of you might say, that's crazy, Anna. Why would you cut your risk that much? And again, because first of all, it was my data that was telling me it's time to cut the risk. And second of all, it was me, how I was feeling. And I was looking at the screens all the time when I was in the trade. I was starting to get fearful. I was missing out on, really starting to miss out on the setups and questioning, like, I'm not going to take this setup because, I was fearful of that risk. I was fearful of losing. So that's why I just want to say, it really is personal, and no one else can tell you. Nobody can tell you what you should or should not do, because, for example, myself, I think it's very aggressive when someone is risking 2%. But if you come at me and tell me, you know what, Anna, but this is what I do, and that's what suits my strategy and my risk appetite and my emotional management when it comes to risk, then go for it, do it, right? Just as long as you're not obviously going on the other side with gambling, chasing, and that's why you want to use a bigger risk just to achieve either the targets or make more money and all the monetary stuff, right? So basically the risk per trade, we focus on how much we're willing to lose, right? The same thing as we did for the previous. We were it directly affects how much you can win or lose, right? So we're always focusing on the losing trades. Sorry, guys, I need to sneeze. Sorry about that. Right. So, and then I want to start by saying this: knowing how to calculate position size is a simple skill that helps traders avoid big losses. So, again, I need to mention losses because I truly believe when it comes to the position sizing, we really need to focus first is not on the wins, not on how much money we can make, not on how quickly we're going to achieve those targets when we are in trading senior portfolio manager. You're on the phase 2 of simulation. You need to achieve that 8% and you're just, calculating your position size based on how quickly you will be able to achieve those targets, right? So I think, again, we always focus on that losing, how much we can lose. Can we stomach it? What is the hour plan is telling us? Can we actually open that much of the risk, or shall we lower it, or can we maybe up it up? So again, it's just it's really a skill, and it's a simple skill, right? Because it should be simple. It's nothing really complicated in here. It should be very simple because you should know by your data and you should know by your emotions how you're feeling when it comes to using your position size. Okay, now let's go to the C Trader. I'm going to walk you through with an examples and I'll guide you through how we can calculate those position sizes. And the main thing, what you suggested to me was still keep on going, still commenting how I'm feeling. And, it's a little bit, I'm acting here, but I think it's really good because you guys can really relate to it. And yesterday's one of you emailed me to my email and said, I just felt like you were literally pulling out the words of my mouth, because that's exactly how I'm thinking. And that's the thing, I want you to feel like you're normal when you go through these emotions, because trading is emotional. And I really want you to understand that this is actually okay if you feel certain way or you're thinking certain things, because most likely another trader somewhere out there in the world is probably experiencing the same thing. Okay, so let's look at the C. Okay, so this, what you're seeing here right now, these were my yesterday trades that I executed with you guys on the first the live stream of the marathon, right? And then I entered another trade and I took a big loss. Okay, and then I actually also took selling here on EU, and I was late on this setup, but I just took it anyways. And my stop should be, smaller, wider, but then it was not enough risk reward. So anyhow, I just wanted to explain these setups. Now, let's do the same thing as we did yesterday, and let's try and get into some trades and calculate the position size together, okay? So I'm going to go on a lower time frame just so we can have a little bit more action going on. Now, first of all, let's start that my current balance right now is 99,826. And first, I want to apologize. Sorry for ignoring you. Completely didn't see the comment. Hi, thank you for joining in. So let's start with this. I am in the drawdown, just a little bit of the drawdown, so about 0.2% in the drawdown, right? So almost 0.2%. So, right, it's not even 1% drawdown. So, and this is my phase 1 account where my target is 5%. So I need to make 5% profit on this account, and then I will be able to pass my phase 1. So now logically, let's think, right? So I am in small drawdown, and I am willing to go into long. So I'm going to buy this, right? let's try and find, maybe this is some kind of support area, need to find something. So this is our support. So I'll try and figure out how can I buy this setup. No. Okay, so now, no, what was that? So now what I need to do is I need to figure out my position sizing. So there are two ways how traders can trade. You can either have a set lot size, which basically means you always trade with the same lot size. Let's say for 100K account, if you know that your stops are maybe about like 20-ish pips, 10 to 20 pips, right? Then your lot size could be, if you want to risk like 0.5%, right? So let's put 20 pips stop, okay? And 250. And I'm going to be risking 0.5%, okay? So I am buying this. And what I did now, I know that I accept the risk of $510 in this case, right? So remember what I said. First, we go and see what we're risking with, right? So in the dollar amount, this is 510, okay? So 0.5%. Feel fine. I feel okay. This is based on my rules, right? So everything is good. And now I choose my take profit also based on, risk to reward. It doesn't really matter. So at this time, we're just focusing on losing, right? So I made sure that I calculated my risk based on percentage, right? Because my stop is 20 pips. I traded 2.5 lot sizes and I feel good because I have put on the rest that I needed to do. So now let's go back to talking about how traders can trade with set lot size. So for example, there will be traders who will be trading one lot all the time or 0.50 lots all the time. And what they will do, they will be, for example, trading a certain zone. So currently we are like in the support area, right? So what I'm going to do, I'm going to place a trade in here. And again, I'm not checking like my loss because I already know my strategy, right? And it says that I need to trade the set lot size. So I'm not changing my lot size like ever, right? So I'm just trading the set lot size. And I know that my stops are normally like 20 pips and that's it. I just trade one lot size and I don't need to calculate it anyway, right? Now, this in here, I think it's obviously it's really important to look at your data, what your data tells you, if you can trade that or not. But I think there's going to be, times, for example, when you trade a set lot size and market is really volatile, then you can actually hurt yourself because the market can get really, really volatile, start to move really against you if you trade without the stop, which obviously should not be the case. You should always use the stop loss. But I do think that when you're starting out to find your risk management approach, I think it's actually okay to start with the set lot sizes. And let me tell you why. Because it's going to take off the pressure of you trying to calculate. Now, sometimes you won't be able to know where is your, let's say, how big is going to be your stop loss. Because let's go to GU, right? So let's say I'm going to trade one lot size, which is my set lot size. I'm going to trade that. I'm going to buy this and I'm going to put my stop loss based on price, right? So, and I'm going to be looking because I'm buying now. I need to find like a previous low. Where was the previous low? So I'm going to set my stop in here, right? And seeing this, in this case, my stop is massive because the previous low is like 50 pips away. But sometimes when you trade, let's go to gold. Let's try and see. Let's sell the gold. So we're trading one lot, right? We're going to try and sell the gold. Okay. And the same thing, what we're doing, we're trading the set lot size, but we're placing our stop based on the price action. So above the previous high, right? And for example, we are always targeting, I don't know, like 10 pips. That's very little. Guys, I don't trade gold. This is this is a little bit confusing. So yeah, but the idea is this: you always trade the set lot size and you put your stops, right? If you're selling, then above previous high, which is in here. And then it really depends. If the range is really, really big, then your stops will be much bigger and you will lose more more money, right? But let's say if the range is much smaller. So if I drop on 1 minute, let's say like this, right? So on 1 minute, let's say the previous high, like is in here, right? So then, because it's much closer to your entry, right, it's going to be much smaller risk. So in this case, it's only $268. But if I would trade like a higher time frame and put it up right here, then it would be 1,500. So that's the difference trading the set lot sizes if you're trading based on price action. Now, another example, let me just, I'll shut everything down in here. So another example would be to look at this. For example, I am going to, again, trade the set lot size of 1 lot. And as a trader, I have a strategy where I am targeting 10 pips. No matter what is it like I'm doing, I'm always targeting the 10 pips, like so. This is my target. And what I'm risking with is 20. Well, let's do 10, 1 to 1, right? Let's not do negative risk reward. So I am selling right now and I'm targeting the certain profit, which is 10 pips, right? So again, using the set lot size, and I know that it will never change because my stop is always 10 pips and my profit is always 10 pips. This approach is definitely more beginners friendly because again, it takes off that worrying about if I'm managing my risk correctly, am I like putting everything in a place as it should be? Like, did I use the correct lot size? And I think this also eliminates less mistakes for the traders. When you trade the set lot size, you just set it in here, right, in quantity where it says lot, and you just trade it all the time. You don't need to change anything, and there's less room for the errors. For example, sometimes you want to enter the trade on 1 lot, but something happens, fat fingers, or I don't know what it is. And what happens is that you press the button and then you see, oh no, I entered 10 lots. I only want it to enter 1 lot, and then panic kicks in and you're like, what am I? Oh my goodness, I'm $140 in the minus. What to do? What to do? A lot of emotions kick in. Shall I keep it on? Shall I not? Do I need to close it now because I'm already 280 down? So see, like that kind of things can happen, and it has happened. I've heard crazy stories. Someone's cat walks on the keyboards, presses all the buttons, and then what happens is the trade gets opened or they close it too early. Sometimes I have heard that they've dropped their phone or someone took their phone and closed the trade or opened the trade or did the wrong calculation, right? So I think when we have traders who trade the set lot size, they definitely have like less mistakes like this. This mistake is now costing me $350, right? And think about it, like if something like this happens. By the way, I'm really curious, has that ever happened to you where you entered the wrong lot size? Because it has with me. and it's not a good feeling at all. And you know what? Every time you make a mistake, that mistake seems to be costing you money, instead of like, can I not just get lucky for once? And making a mistake actually, be useful mistake. Because normally those are like the worst things ever that happens. Once you calculate the wrong lot size, or once you just close too early, or remove the take profit, or whatever it is, normally those are the bad mistakes. So yeah, and basically this is what's happening, right? When you're having the set lot size and you just trade 1 lot, there's definitely more, there's definitely less space for an error to occur, something like this. So let's say 350, I think it's going to go really against me, so I'm just going to shut it down, and it's going to be $350 mistake for me. And the worst part is that when something like this happens, traders struggle to get out of it, and they keep on that trade, they keep on that mistake, right? And the thing is, I think it's just so important to acknowledge that, right? So once you make a mistake, or once you choose to trade in a certain way, once you choose to set that lot size based on percentage, or set lot size, or just trade 10 pip profit, 10 pip stop, whatever it is. It's just important that you are following it through, because if you don't, then you will start to see that there's going to be a lot of emotions taken over, and then after, you know, your trading session, you come out of it and you will just feel rubbish because you have just really ruined your moods, especially if you have lost, right? So that's not good. Now, let me show you how calculation happens when we are calculating based on the risk. So I already took in here, I think at the beginning, I already took a trade when I said I'm going to trade with this kind of percentage and I'm going to calculate my trade. So let's say in this situation, there is a support area right here. Let me see if I can do this. If I can do copy and then paste it in here. It's not allowing me. Okay. So I am going to put the gray, fill it, and then transparency and move it down. So just trying to find something that at least makes sense, you know. So we're on 15 minutes here. This is our support. It was broken and now we're retesting. So I'm going to sell this position and I want to put my stops just above this, you know, area, like above the zone. So I see how much it is in the pips. It's very little, 5.6 pips. Okay. So I'm selling. My stop is, I'm typing in 5.6 pips, probably less now. Let's do 5. And I want to risk 1% on this, right? So how much lots do I need to use? That's going to be many lots. That's going to be 20 lots. That's too much. Wait, let's put our stop in here, okay? Just a bit further up. So 27 pips, okay? Let's do this. That's a bit too much lots there. 27 pips, and I want to risk 1%. It's going to be about, let's see. Okay, so this is how you adjust. So you adjust your lot size if you need a bigger risk, the bigger lot, right? And you adjust your stop based on that as well. Okay, good. So I am going to take the trade. Okay, there it is. So my stop is, let me zoom in so you can see a bit better. So my stop is in here above the previous high, right? So then to calculate my lot size, I needed to measure how many pips is from my entry to my stop. In this case, it's 25 pips. Then once I know my pip amount and stop, right, for my stop loss, how many pips I have, then I can set my lot size, okay? Then I can set my lot size, and then I'll be able to risk 1%. Or if I want to risk 0.5%, then I need to half the lot size and so on. But everything in here is showing. And by the way, guys, this is the reason why I love CTrader, because it's a great platform with already included the risk management inside of the platform. That's like your tool inside of the platform, and you can use it. And yeah, that's my favorite thing about it. And once, remember what I said in the beginning, we always do first things first, is we make sure that we can afford to lose that much. We make sure that we are applying our risk based on our trading plan. So my trading plan now says I'm risking 1%. I have entered my trade. Everything is great. Everything is fantastic. And once it's calculated my stop, now I can think where to put my take profit, right? So, and I want to target the previous low right here. Okay. This is actually not a bad setup, by the way, you know, like this is a really good setup here. So, so yeah, and I want to target the previous low in here. And this is how I calculated my stop, like my risk. I've calculated my risk based on the percentage I risk with. So I choose to risk 1%. I measure how many pips my stop is, and then I adjust my lot size to make sure that I'm risking the percentage I want to risk with, right? So I hope that makes sense. Again, guys, if you have any questions at all, you can either ask them now, or you can email me and personally to anna@getleverage.com and give me either your feedback or tell me your stories. I love reading other stories. Like I really do love yesterday. So And it makes me giggle sometimes as well because I've been there. I know how it is. I know. And and the trader says this is a crazy story. And I'm like, you know what? It's actually not that crazy because I've done it. So it must be not that crazy, right? But yeah, so first thing first, remember when we are calculating our position size, first things first is your loss. We're looking at how much we're willing to lose. And then that amount of the money will start to kick in with our emotions and we'll start to feel, how is this feeling? How is 1%, like risking now 1%? How does that feel? Currently, yes, I am in a little bit of the drawdown. Well, I started with 0.2%. Now it's like 0.7% because I showed you different, examples and I was not that lucky here. And how do I feel about it? It's normal. I feel good. I'm willing to accept the risk. See what I did? I'm willing to accept the risk. I have calculated my risk and I'm willing to accept it, right? So my position size is aligning with my risk management, with my, first of all, with my trading style, right? So the strategy, it's aligning with that, and then emotionally I can accept it and I feel great. And the thing is, most important thing as well is after you, let's say, hit your stop loss or your take profit. Now first let's look at the stop loss. If I hit the stop loss in this position, I have already accepted the loss. I know that I'm going to lose, if this hits stop loss, I'm going to lose $1,010.92. And I have accepted that. I have already done my part where when I was calculating my position size, I already accepted my loss and it is done and dusted. And if it does hit the stop, which can happen 50-50, right? Then it's going to be so much easier for me to deal with this because I already accepted it. So whenever you set your lot size, well, maybe that's not the right thing to say. Wherever you calculate your position size, always look at the loss, right? And if you're trading set lot size, right? Like I already showed, I think I showed it in here. If you trade a set lot size, then it's always really good to know that you still look at the loss and you accept it. And if you are the trader who trades like 10 pip stop loss, 20 pip stop loss all the time, no matter the price action, no matter what, but when you take a trade, your stop is always 20 pips and it's always the same lot, then again, I still think it's important to just first, I accept the risk and then I get in. And I do want to suggest something. So obviously it's not working for everyone, but if you take a pen and paper, maybe like a small, let's say like a small note for yourself, right? So let's take this kind of paper, okay? And write on the paper, simple 3 words. I accept risk. Like so. 3 simple words. I accept risk. You write them down and you place them somewhere on your desk where you can see it. And I know some will say, this is the crazy stuff. This doesn't work. And I do want to say it's not going to work for everyone because we're all different. But for myself, when I take a paper and pen and when I write it out, when first of all, I say it out, I speak it out, then I put it into writing and I put it in front of my eyes where I can see it all the time. I accept risk. Simple 3 words. But I'm telling you, it's like a magic, works like a magic for me. It is much easier to accept that risk. It is much easier to control my emotions when I see the trade going wrong. Well, currently it's going, good. But if the trade is going wrong, it is much easier to accept it because I already done it in the first place. So if you think that you're struggling with this, or if you're having a really hard time to calculating your stops and calculating your risk, well, maybe try and take this little, tip, write it down, pen and paper. It does work for some. Maybe it's not going to for you. Maybe it's not going to work for you, but at least try it. It's not like it's going to harm you. Just pen and paper, write it out, stick it somewhere where you can see it all the time. And just every time you trade, you just look at that. I accept the risk. And hopefully that will help you to calculate it better. So with that, I want to finish this second live stream of our risk management marathon. I hope this helped you, and maybe you learned something. Maybe you're gonna, if you're gonna use this little trick, writing it down, I accept the risk, please let me know. I would like to know that. But I hope that this is helping you to understand that whatever is that you're doing, right? Like as I said in the beginning, just because someone else is risking this much, or they are trading that way, or they're trading set lot size, or they're risking based on the percentage, right? It does not matter. It does not matter to you, because you do what suits you, right? And if your risk appetite is bigger, if your risk appetite is smaller, it's absolutely fine. By the way, I'm going to close this trade. Well, it's always good to close it. This is for demonstration, right? And I just want to say, you do what suits you, right? And I'm hoping that these sessions will help you in some small way or big way. I don't know, but I just hope it helps you, and you can learn to calculate your position size better, with more confidence, and with more understanding. So thank you so much for joining me today. I really appreciate it. And I will see you tomorrow. Right, guys, take care. See you later. Bye.